In this video, I'll complete practice comprehensive problem number 4. I'll go through the steps that you need to take to complete that problem, and you can use these videos to help you complete the actual comprehensive problem number 4. So we're going to do journal entries, as you can see here. Then we're going to post to the general ledger. And then once we have that, then we're going to do the trial balance and the income statement, statement of retained earnings, balance sheet, etc. All right. Okay. ABC Company issued common stock in exchange for cash for $290,000. So what's happening here? The company's selling stock and receiving cash, right? So if we go to our journal entry handout, cash is an asset. They're receiving cash. Cash is going up. We're going to debit cash. Common stock is part of common stock. Whenever you issue common stock goes up. So you're going to credit the common stock. Okay. So I'm going to go ahead and put my journal entry in here. And it was $290,000 for both. So 290 for the first one. Okay. 290 for the second one. All right. I've put that in. Now if I go to my T accounts, you will see the first one, 290. And then when I go to common stock, which I have to scroll down to find common stock because it's in the equity section, you will see 290 here for common stock. All right. And that's what we have to do for each one. Okay, here's the next one. ABC Company purchased land with cash. What's happening here? I'm receiving land and I'm giving cash. So if we look at the journal entry handout, cash is going down because I'm giving cash. Cash is an asset, so I credit. Land is an asset. Land is going up. So since it's an asset, I debit. I debit to increase the asset. I credit to decrease the asset. So I'm going to debit land because land is increasing. I'm going to credit cash because cash is decreasing. All right. So I'm going to go ahead and put in my journal entry here. Land and cash. And it's for $130,000. And so 130,000 here. And 130,000 here. Okay. And I post that. So I go look down for the land account. Oh, I put it in the wrong place. So 130,000 and 130,000. Okay, there we go. And so I go and look for the land account, and land has 130,000. Okay, and I go for my cash account. Here's my credit for 130,000. All right, let's look at the next one. On the 4th, we have ABC purchased a building in exchange for long-term notes. So what are you receiving? I'm receiving in a building, and I'm not giving cash. I'm giving a long-term notes payable. Long-term means it's more than a year. So again, I do the same thing, right? I go to my journal entry handout, and I say, what am I getting? I don't remember. I'm getting a building in exchange for long-term notes payable. So building is an asset. So I go to asset here, building, and the building is increasing. So I'm going to debit building, and a notes payable here is a liability. All right. So what am I going to do with the liability? Since the notes payable is going up, I'm going to credit it. When you issue a notes payable, that increases the notes payable, so you credit. Building is an asset. You receive a building, so you debit. All right. So that's the items that you have here. So I'm going to debit building, credit notes payable for $275,000. So I'm going to put in 275,000, 275,000. Okay, and then I go down to building. Here's my debit for 275,000, and I go to notes payable, which is my liability. This is notes payable long term, and I credit for 275,000. Okay. All right. Let's look at the next one. ABC Company purchased furniture and fixtures with cash. So that's very similar to what we did before. We received furniture and fixtures. We gave cash. If you look at it here, cash is an asset. We gave cash. Cash decreases with the credit. So the other item has to be a debit. And what is that item? Furniture and fixtures. Okay, very simple. So I'm going to put in here a debit to furniture and fixtures and a credit to cash. And the amount is 60,000. So I'm going to put in 60,000 here and 60,000 here. And I'm going to go down. Again, every time you record, you've got to go down and you've got to post. So I'm going to go to furniture and fixtures. Here's my debit for 60. And up here is my cash, my credit for 60. Okay, don't forget to post the entry. Do it one at a time and do it slowly to make sure you get it right. Okay, the next one. ABC purchased equipment with cash, right? So very similar, right? I received equipment, I gave cash. So cash is an asset. I gave cash, cash is going down, so it's a credit. The other side of the entry has to be a debit. And what did I get in exchange for this cash? Okay, what did I get? I got equipment for $41,000. So I'm going to debit equipment and I'm going to credit cash, and the amount was 41,000. So 41,000 and 41,000. And then I go down to equipment and I put in the amount here, debit for 41,000, and then I come up to cash and I have the credit for 41,000. All right, we'll do one more. ABC provided services to a customer on account. This means you provide service. This is always service revenue. Providing services equals service revenue. And this was on account. That means you didn't receive any money, right? Your customer has an IOU, which is an accounts receivable. So service revenue is increasing and accounts receivable is increasing, right? So if we go to the asset section, we see accounts receivable is an asset. It's increasing, so I'm going to debit it. Okay. Service revenue is increasing on the revenue. That's a credit. So that is my journal entry. So I'm going to go up and the amount was 212,000. So I'm going to put in 212,000 here and 212,000 here. And then I have to go and I have to actually post it, right? So here's my accounts receivable. I have the date, 212,000. And then I go down to service revenue, which is sort of all the way down, and 212,000. All right, we'll stop here and we'll continue the rest of the journal entries in the next video. So this video is not too long.